This will be really fun. We have two MIT math nerds with us, famously called by the Wall Street Journal, Tarek and Luana, co-founders of Kalshi. So something fun happened in the last week. Tarek, do you want to explain what happened at the SEC roundtable?
For one, what dimension? A lot of fun things happened, but we were invited to this sort of CFC SEC roundtable in DC. It was a sort of interesting thing, and apparently this is the first time they do it in a decade, and it was a bunch of press around it. But I would say the most interesting thing that happened is obviously there was CME, ICE, SIBO, NASDAQ. But then the weird part of this panel is I just got much louder, but is Kalshi and Polymarket were there. So there's kind of the new entrants or the challengers, and maybe the kind of most interesting takeaway of that is this sort of asset class that we've been building over the last few years, prediction markets, event contracts. If I think back to a year or 2 years ago, there was absolutely no way we'd be on that panel, but we were this week, so that was fun. And then there was a bunch of the fights and jibes and all these things that happened there, but
that's what I wanted to talk about. I wanted to talk about the punchy stuff.
Well, it's interesting. I think financial regulation is going through quite a bit of change right now. And I think there's a little bit of a view from the sort of legacy exchanges that in some interesting way they're sort of being put at a disadvantage because the sort of new entrants can benefit from lack of scale, or at least lack of scale in the last few years. Now we're getting real scale. To do things like fighting regulators and suing them and being sued and taking on Wells notices and so on and so forth that they can't.
We'll get into the whole story of Kalshi. To start, I want to go a little bit more off script. Sorry to your comms team. But Tarek, can you please share Kalshi's latest numbers?
So we're doing, Luana knows them better. So I'm a little bit I don't look at the numbers a lot because I'm a bit superstitious. I try not to mess with them. But so I think we're doing 40 billion of annualized volume now, up from last year at the same time period, right before we got the election approval, we were at I think 300 million of annualized volume. We're at 40 billion now, and it's growing 20% week over week. So the top line growth is growing 20%, retention is up. Basically everything is growing. There's a number of things that are happening, obviously our introduction of sports markets, but also our partnerships with the brokerages like Robinhood and Webull and others that are coming live. And then the sheer sort of number of markets that we scaled to. So we were at 80 markets back in October 2024. We're at 3,000 to 2,500.
Over, I think 3,300, so
3,300 markets now. So the company is growing, and I think Kalshi is probably, Alfred from Sequoia might correct me here, but I think we're probably the fastest growing company in America this year in the US, aside from AI. Maybe there's Cursor, Anthropic, but then the numbers there are, it's negative gross profits and stuff like that.
So let's talk about how we got here. Luana, do you want to share the story?
Yeah, I'll be happy to. Well, we started the company quite, I think 6 years ago at this point. And we were both at MIT before, studied computer science and math, and we really never really thought about starting a company. It was always about finance. So, fun fact, both of us actually interned at Citadel. I was at Citadel Securities. It was at Citadel, the hedge fund. And it was actually through a lot of these experiences in college that we actually learned about prediction markets. But so one example was Tarek had an internship at Goldman. It was around the Brexit time. And a lot of people were calling the desk and being like, hey, I want to get exposure to Brexit. I want to hedge Brexit. What can I do here? And Goldman would create this kind of type of portfolio and thing and try to sell it to them at super expensive prices. And at the time, what was very clear to us, why is this not on an exchange? And I think I saw it repeatedly also at Bridgewater and how the company was structured where it also worked. And then it was at Citadel, actually, that all of these kind of learnings and ideas we had came together. And we started thinking that there really should be an exchange where you can trade directly on what's going to happen in the future. You're not trying to figure out, oh, so if this happens, I don't know, this currency is going to go down, this stock is going to go up. If I do this, what are other variables I need to be keeping track of? We just wanted to create something where you can get exposure directly to what you care about. And the fancy term for it is prediction markets. And that's how we got started. At the time, we were very naive and we thought that, we're very smart MIT kids. If we figure out the MIT classes, we're going to figure out the federal government, which looking back is probably not a good decision making there. It ended up working out. But at the time, we really wanted to do it the right way. And I think it was because we came to this from a finance angle, right? Our goal was that Goldman and Citadel and Bridgewater, on top of all the brokers they're thinking about, would use Kalshi and would use a centralized exchange to price the future. And given that, it was very clear we needed to do the regulatory path and we needed to figure out how to do it legally. So we went on a 3-year journey to convince the CFTC to allow us to operate. And we went 3 years of battling with the government on legal analysis and so many things to be able to legalize prediction markets and become an exchange, a regulated DCM. And then we launched around 3 years ago, but the battle for each contract continued. And it ended up, obviously, the culmination of it were the election markets. That was kind of the biggest dream of ours, was having election markets legal in the US again after, I think, 100 years. And we ended up having to sue the regulators to do that. And exactly a year ago, we launched election markets legally in the US, and this past year has been fantastic. Just growing a lot from elections to sports to the brokers and really making this a real asset class. It's beginning of our goal back in 2019 is starting to become true. Now we need to have the rest of the folks using us as well.
I think there's a few things that are important about this story. First of all, headline, Kalshi started out of Citadel, actually. So it's nice to be back here in full circle. I think, the one thing that was important, we wanted to be traders at the core. In some ways, and you go through college and there's the persona of the sort of student that is tinkering with products and wants to sort of build a company and become an entrepreneur. And it wasn't really the case for us. I think the thing that we naturally gravitated towards was trading. We loved trading, being part of financial markets. And but this is sort of the idea, I encountered it at Goldman in 2016 before the Trump election and Brexit, and Luana saw at Bridgewater, where they have this sort of division that comes up with the views on the world and the division that sort of executes on those views, and they were kind of disjoint. Obviously, we saw it at Citadel as well. The idea sort of pulled us into building it because, you have financial market to price, companies. You have financial markets to price commodities, currencies, credit. Crypto in some ways is currency or commodity, whatever. But this idea of financial market that can price simple questions about the future was a really interesting one because, we got pretty convinced early days, if we could actually build it, yes, there are problems. There's obviously regulatory problems, and then there's liquidity problems. There's a bunch of other problems. There's a lot of challenges in this market, but if you could realize the full mission of that market, it could be the largest of them all, because the largest number of people will care. And we're seeing that, right? We obviously are not doing the notional volume of CME on a yearly basis.
Yeah.
But, we've grown quite a bit and more people care. More people talk about Kalshi and talk about some of the legacy exchanges because people relate to these markets. And the number two is, well, yes, it is important to price companies, but, what if we could actually price questions about the future? Whether Brexit is going to happen or what's happening with climate, who's going to win the next election. These are important questions that a market-based, rational answer would do us quite a bit of good, instead of sort of the polarized, biased, emotionally fueled sort of debate that we're currently having about all these questions. So it's been quite a journey. Obviously, the regulatory journey has been a very tough one, but this year has been pretty amazing.
Not many people decide to sue the government. So I'm just curious from your standpoint, how did you navigate that process?
If it were up to me and Alfred, we probably wouldn't have sued, to be honest. She's the one who wanted to sue. But, we I think there's this mix of sort of being naive. Well, we were very committed. Well, a few things. I mean, when we first started the company, we left everything, right? Like, I was actually going to go work at Citadel. I think Luana similar. And when you make this sort of decision, you tell my parents are like, what on earth are you doing, obviously? Like the usual, the typical sort of cliche of, what are you doing? And I didn't know, honestly. I was like, yeah, I'm going to go do this thing that's, pretty much illegal right now. And, and not take this sort of dream job that I've been working on for 4 years. Then it gets really hard because then there's a sort of sunk cost fallacy, but like, every year, like, well, here's how much I would have made if I stayed. And like now you're like, you have nothing and you're figuring out how to, so you had to win. Like you have to figure out a way to win. When you put yourself in these sort of situations, like there's so much relying on you. You've sort of made a promise to yourself and people around you, like you have to make it happen. And then the other thing is like, again, we didn't start this company just because we wanted to start a company. We really like this idea. We want to see this idea into the world. We always thought once it's out there and people see it, they will love it. It's going to be big. People are going to be talking about it. And the decision to sue didn't come light, and now we always get asked by kind of new entrepreneurs or like new companies, like, it's like, oh, should we sue? Like, no, don't sue. Like, at all costs, avoid suing. Suing is the worst. Never do it, because it is the worst. Like, and we first started talking about the election market in 2021 at the end of it, and then we got denied at the end of 2022. So we were waiting. We were trying to get it done by the midterm election, but we sort of, it was basically like, we got delayed by the regulator beyond the midterm. So, we did this sort of team meeting with the entire team, and the night before the midterms, we're like, hey, this is just not happening. And I remember, I think we lost like 30% of our team right after that. And people were like, well, this was the wrong strategy. We should have never done this. We should never put a whole year into this as a strategy. We should have done something else, and so on and so forth. And then we made the decision to double down and basically to try again for the next year. So we worked on it till the end, because we're like, maybe we get it by the 2024 election. We worked on it till the end of 23, then we got denied again. And then this was sort of the critical juncture where we're like, what do we do? Business is not really working. We never thought that prediction markets would really, there's a sort of critical mass type thing that happens in these markets. Like it's a bit of, you have to have the chain reaction start. And liquidity begets liquidity, and lack of liquidity begets lack of liquidity. So you needed this sort of really strong, like powerful, like force that would generate enough momentum for this market to basically like start, to get kickstarted. And we always thought that it has to be the election. Like it was this sort of single unifying event where there would be so much interest and so much trading around it that people would get educated and get started. And so we get to the end of 23, and yeah, why did you want to sue so bad?
Yeah, I mean, to me, adding to what you said is that the election markets are just too important. They are the kind of really the holy grail of prediction markets. They prove what we're doing, but they also, like the data that comes from these markets is just so important that we really felt like we had almost a responsibility, and we had to do it because we really thought we were legal. What we were doing was, we were right on the law. And I think it's maybe because I'm not American, I had a lot of faith that if we're right on the law, of course the judicial system is going to agree with us. So why wouldn't we? Why wouldn't we sue the regulator? Because we're right. And I think it's just a mix of how important it was and how much we thought we were right, and how like we thought we were going to win. To me, it was very, very, very clear that we needed to sue the government, and I thought that there would be, I kind of underplayed the retaliation and all that side. I thought that wouldn't happen as much. I was wrong on that, but I think it's just in general, just how important it was and how right we were legally. And I think that the way that the lawsuits panned out, it just really proved that we were right legally, right? We won in the district court, and then it went to appeals, and we won unanimously with all Democratic appointed judges, even though there was kind of a division at the time that who wanted these markets were the Republicans and things like that. So we were just very clearly right there. But it was definitely a hard decision. And we only got 1 month of the election market live because of the timing of the lawsuit going there. But I think, yeah.
It was enough, yeah.
It was enough.
And now trading volume has surpassed the election.
Yeah, Yep. Like we have way bigger days now than we had the election day. And it's a mix of a lot of things, right? I think that this year, what you see is a combination of 5 years that we have been building, right? Like for example, to be able to integrate with brokers, it's been the past 2 years that we were building so many systems and so many things to be able to integrate operationally, technically, and all those things. And you're just seeing now the result of work that the team has been doing for years. So yeah, now like I think every weekend we have all-time highs, so it's very exciting.
I've seen you've also expanded into 24/7 trading. How do you scale up the team with that?
Yeah, that's a great question. And I think it ties a bit to the regulatory landscape as well. So the first thing we had to do is make sure we had surveillance. We all have, we built surveillance system for our markets in-house to make sure we had surveillance 24/7, customer support 24/7. But our goal is to go international really, really soon. And it was kind of a precondition for that to go 24/7. But a lot of being able to build all of our systems from scratch in-house, the technical side was actually pretty simple to go 24/7. It was more the operational side that we just needed to make sure everything was buttoned up. But we've been 24/7 now for I think over a month with no issues. So,
What's the actual process to get contracts live?
that is a great question. The process itself, the regulatory process is we need to certify a contract to the CFTC. If we send it before 8:15 a.m., we can list it the next business day. And if the CFTC doesn't decide to stop it. But of course, there's a lot of work that goes into actually getting a contract that they will approve, making sure that they kind of like your operations and your legal side is buttoned up. The first contract we did, I think, took 18 months to get through. Nowadays, like most of our markets, I think, is just less than a day, because a lot of it you can develop based on previous markets to try to shrink the timeline. So we've really built like operations to make sure that almost every market that people suggest go live in the platform within a day. Of course, if they're legal and compliant, but most of the requests are. And yeah, there was like a team in-house that's pretty much like looking at all the news, making sure that we have all the markets as quickly as possible. And it's just been years of developing this operation to get there.
Tarek, you've mentioned multiple times that you think prediction markets will be bigger than the stock market. What is it going to take to become a $1 trillion asset class?
Well, it's pretty much already like close to 100 billion a year of asset class, right? Like, it's pretty easy to imagine a 10x from here. Like, we haven't even started. It's been a year. Like, and so, you know, it's kind of crazy to think about. Like, we really have been properly operating and properly servicing customers and being able to do what we need to do for like a year, 12 months. So, I just think I go back to the first principles. Like, I think a very large number of people care, much larger than, you know, the traditional markets. And I think retail as a pie has just been growing in the US, and I think it's going to keep growing. It's growing in the stock market, but it's growing outside of the stock market. And, you know, like when I think about prediction markets or like event contracts, like the point here is that it's not about yes/no question. Like, over time, we're going to introduce different structures, and there's going to be questions that are not yes/nos. But it's about underlyings that are non-traditional. Like, could you financialize in anything that people care about? And you know, Kalshi is everything in Arabic. The long-term vision is to financialize everything and create a tradable asset out of any difference in opinion. And I think if you do build a general purpose exchange that can resolve differences of opinions on anything, like, the TAM is quite massive, you know, quite a bit bigger than the current TAM of the stock market, I think. And then the implications are very important, because now you imagine this sort of, you know, layer of financial infrastructure that ends up, you know, powering, you know, the new era of financial trading, like in trading and sort of this idea of resolving different opinions, but it's also powering things like the news and how you engage with the news and how you think about the news and, you know, and what's happening in the world, and how you kind of like, in some ways, like, figure out what's the truth, like what's sort of like ground truth and what's happening around us. And I think, you know, putting aside sort of the retail trading and the institutional trading product, like, there's sort of this separate product, which is like, we are living in a world where, like, we have an abundance of information, but like we don't have like, our filter is becoming increasingly more noisy. There's a lot of noise, and like we don't really understand what's real from what's not. And prediction markets are an antidote to that. They do a very, very good job at distilling information and surfacing truth to people. And you're seeing this sort of massive shift where like people are using them whenever they think about questions about the future, whenever they're debating about anything. And I think that trajectory is going to keep going. That's going to become that's a new consumer habit that I don't think is going to be undone.
What's the actual business model of Kalshi?
Just take transaction fees, trading fees.
And how are you working with institutional partners?
So we have Kalshi Direct where we take, just charge our direct retail customers trading fees. And with the brokers, we basically charge the brokers a trade exchange fee, and then they can charge whatever they want to their customers. And then obviously we have a few market makers. Some of them are institutional market makers. There's we have tens of them now, but the most notable public one is Susquehanna. There's a number of other similar ones that are non-public. But then also there's like this sort of rising class of, I would say like, it's either sort of individuals or small prop shops being formed that started in prediction markets. They were with us from the very, very early days, and they scaled, with us till today. And those guys, sometimes we give them fee rebates, and like, they get some of the usual benefits that they get on traditional exchanges. I'd say the interesting piece about that sort of last class that I just mentioned is like some of these small teams, prop shops, you could have like teams of 2 people. They're making tens of millions. I mean, I think our top performing team is making 60 on Kalshi this year.
Yeah.
60, maybe even more, honestly.
And there are 3 people.
3 people. They got an intern. Yeah. But like, it's amazing. This asset has grown, and these are people that like, this team, for example, like started with like, they used to like trade on Kalshi in the bathroom, hiding from their wives, like on the side. And then it became a hobby. Then it became a full-time job. Then it became, a company. And now it's like a company that's making $60 to $70 million a year. Like that's a big company with 3 people. So it's amazing to see how that sort of whole ecosystem has grown around the market. And we're going to see more and more of that in the coming years.
And more recently, I'd say you guys hit mainstream. You were on South Park.
Yeah.
What is that like?
Well, first of all, we didn't know about it.
You didn't know?
A lot of people asked if it was a paid promo, which, if you had watched this episode, you'd understand why it wasn't a paid promo. But, it wasn't.
Yeah, it was funny because I'm not American and I've never watched South Park before. So I woke up and there's a bunch of messages being like, we're going to be on South Park. And I'm like, oh my God, what is that? But it was really cool. We all watched together in the office. And honestly, it was less bad than we thought it was going to be.
Well, we obviously don't agree with the episode, but, needless to say. But it was funny. I mean, and the most interesting part was like they copied the app 1-to-1. I mean, even the bugs, like even the refer $10 at the top, and I hate that thing on the app, but like we have it, and like they copied it. I mean, it was really amazing. But again, it's one of those interesting moments where like this can really be embedded in culture, embedded in our day-to-day, embedded in sort of the way people think about the world, and I feel like we're really very much on the path.
What have you learned from your users? I know you have like a whole swath of different demographics.
Well, I think we've learned a lot. I think one of the most interesting things, is like there's a lot of people that you wouldn't imagine like what their background is, and they're able to become very, very big experts in something. Like our biggest inflation trader is actually this random guy from Kansas. He's never traded financial markets in anything, but he's made so much money because he's very, very good at predicting inflation by reading the news and everything. And I think from a lot of the users, what we learned is it's the first time they have a way to monetize what before were hobbies for them. So for example, we have markets on Rotten Tomato scores or things related to music, and you see a lot of people that have no background in finance whatsoever, and this is actually the first time they're being able to monetize different things. And it's very exciting to also like hear from them which markets they want us to list, and like they bring more people that have like similar interests, and we get a lot of these like communities growing on Kalshi that I think is very interesting, because I think when we started, we also thought, is it going to be that only the big funds are going to be able to make all the money? And it's very, very far from it being the case. So.
Yeah, our demographics are also sort of I would say the most diverse, because, so we have, I think, the highest percentage of female traders out of any active trading product. And it's interesting because you always ask like, did you ever like trade or like in any, like, and there's this kind of reaction like, no, that's not for me. Trading is like not for me. It's like, well, what do you know? And it's people that would never do like any active like trading. Maybe they have a 401k. They would obviously never touch options or futures, which are way too complicated. And then they didn't also even do like crypto or sports betting, like none of that. But it's like, well, there's a market here for something I care about. Like, you know, there's markets on like what, you know, how well the album for like the next Taylor Swift album is going to do, or like the Rotten Tomatoes scores. And like, a lot of people follow this pretty religiously, and they have a lot of knowledge about that. And there's like a way to kind of monetize it now. And we see this as a kind of a pretty interesting trend over time, because, you know, they start with a certain set of markets and then they can go into a bunch of other markets on Kalshi, and then over time maybe into traditional financial markets. But this is definitely one of those things where like we have a subset of users that are in traditional financial markets, but the bulk of our users are not. They really didn't have a home before this. Like, they're not in traditional financial markets, they're not in sports betting or any of this other stuff. They're just on Kalshi, this weird new thing that, you know, we have been doing for a few years, and now we're basically much more committed to.
What are your favorite markets?
Well, my favorite market ever is, I was a big One Direction fan when I was younger. So it was whether they were going to have a reunion was like a dear market to me. But of course, it goes without saying the election market is the market that I love the most. But that one, and right now I'm really watching the length of the government shutdown. I think right now it's forecasted at 21 days. So I think for me, like, all of the news I get is from Kalshi. I just open Kalshi and I'm like, wow, 21 days, that sounds like a lot. And go through a lot of things. But
for a while, it was a TikTok ban. I think that was like, because it was really one of those, I mean, putting aside the election, obviously, but it was one of those markets where like, it's really hard to price what's gonna happen. And it is important. Like, what's gonna happen with TikTok, whether it's gonna get banned or not, is a very important event. Like, we should know what's gonna happen. There's a lot of people whose like entire sort of revenue stream is at risk. And this is millions of people that are on TikTok that make money via TikTok. And then the opposite is obviously, you know, this whole question about, you know, what is TikTok doing to our kids in the US and so on. And it was amazing to see like how the market was pricing in real time, the sort of infighting of what was going to happen with TikTok. The more recent one that I thought was pretty funny and interesting is the astronomer CEO being ousted. That one was crazy. And like it spiked for like a few days and then, you know, it went back. But, and then he did get ousted, so. Yeah.
Are you guys monitoring the market behavior at all? Because I've seen a lot of them flip last minute. How does that work?
What's an example?
Like, I think the last election one.
Oh, the Mamdani election.
Yeah.
Well, the market had it sort of, so this is what's interesting. That happened with the Mamdani election and it happened with the Pope. So actually the prediction markets were pricing the Pope, the American guy, at 1%. And, you know, there were, by the way, again, the weirdos on the internet that are now the prediction market stars, like, there were a bunch of them that were buying him at 1%, and, you know, and they had this whole analysis for why he was underpriced, etc. But like, this is the thing, like, prediction markets obviously are not a crystal ball. Like, we you know, like, what we can claim is that they're the most accurate way of aggregating kind of the prevailing information that is out there, and, you know, sometimes the information that is out there is not enough, like, and, you know, but it's more accurate than any other alternative. So notably, the Pope market is one of those markets that, like, it is really true. There's not much information about what's going to happen in that room. Like, they go in, they fight, no one knows what happens. They could be fighting. I mean, I have no idea. And like, they come out with, you know, a surprise answer. And so that happened there. New York, the Mamdani election was interesting.
Yeah. What I thought was very interesting, and you see this with the presidential election or with New York, which is how fast the markets are at getting the information. So right after the polls closed for Mamdani, I think it was 9 p.m., they started counting at like 9:02, he was already at 80, or even higher than that. And I think the exact same thing in the presidential election. Start of the election day, I think Trump was at 65, and I think they started counting the early votes for maybe South Carolina or Georgia, I think, and then Trump was already at 80. At like 6 p.m., I think he was already at like 80, 90. And I think it's just like the speed of information versus being on also like watching the news, and they're counting ballot by ballot, and they're not really sure, and they're trying to see and make an analysis. But prediction markets were like, honestly, almost instantly, they are able to get this information and be, if Georgia early voting is like this South Carolina, Pennsylvania is going to look like this, Arizona is going to look like this, and you have like way better pricing. But yeah, prediction markets obviously are not perfect. What they do is they give you a probability distribution, but 1% is not zero. And I think there's a lot that we can do on the education of that, because even for the election, you see a lot of the coverage was thinking that a 65% Trump meant an 100% Trump. And they were comparing it to how you analyze polls versus, and it's just obviously very different, right? 65% is a slightly biased coin flip, right? And I think there's a lot that needs to be done in terms of education for people to actually understand what probability means and how to actually understand and deal with the data that they're receiving. Because the data doesn't mean if 51% is 100 or 49 is 0. So there's a long way that we have to go there too.
Yeah, people were making that, people confused that a lot during the election. And that was like, that was kind of a key learning. Like, it's crazy. Yeah, people really, I mean, it is not a poll, right? Like, because if you're polling 65%, it's done pretty much. But if you're being priced at 65%, yeah, it's like 2/3 chance. That's still very much so a race, right?
Because you're so close to the truth and you're seeing how information is spread across the internet, what have you learned about media and communications?
It's a good question. It's a very good question. The unfortunate reality is, like, you know, people don't really want the truth. I mean, I don't know if it's like, I mean, we've really seen it. Maybe it's not a learning, but like, it's just not what people are interested in. Like, I mean, maybe this is a bit of a broad statement, but like, during the election, the thing that was very interesting, so like when Trump odds were up, and you know, we've kind of really seen this, like, at some point there was like a bunch of conspiracy theories that like I was a Mossad agent because I work at Palantir at some point, and you know, we're rigging the election. And then when, at some point, the Harris odds were up after the Ann Seltzer poll for like a brief point of time, I flipped to being an Egyptian billionaire. So I'm neither. I'm a Lebanese guy, neither, born in California. But there's this sort of very strong like need, and we see it on social media, we see it everywhere, to sort of like reinforce a narrative. And like, it's all about like, what is the sort of end goal, and like figuring out what data backs it. And over time, as people kind of get more and more familiar with these markets, like I think, they'll realize like, okay, this is a marketplace, it's the crowd wisdom, it's people with real skin in the game. The bias is to make money, which is great. All you have to trust is that people are trying to make money on this market, which is an easy thing to trust. People will start going to these markets to find an unbiased sort of source of truth. But it really is, and maybe kind of like the second sort of learning, like it's just kind of how polarized things have gotten, and like, you see it on like different platforms. Like you can put like Trump odds being up on one platform and on another, and in one of them it like, the algorithm boosts it to the absolute like moon, and the other one it like kind of like tanks and it disappears. And like, so even sort of like, so you have media that's sort of biased and is, has a bunch of issues, and not all media, but some of it. And then the polls are like, the accuracy is decreasing. And then even the social media, like, even if it's not the platforms themselves, it's like your network and your bubble around you basically like feeds you the things that, you want to hear. And so there really there's a huge scarcity of like just being able to like look at something and know that it's actually real. Like, and I do think prediction markets, the thing is like, I can't really think of a better mechanism. Like, it's like, if you go back to try to do it from scratch, it's like, okay, how do we solve that? It was like, well, let's figure out what are the right incentives in the system and how do we do it, and make sure enough people participate and enough smart people participate. It's like, how about we take all the opinions from everybody and then weigh them by how much dollar they can put, and obviously if they're more convinced, they'll put more money, and if they're less, they'll put less, and then create an incentive, a monetary incentive to be right, and we just recreated prediction markets. Like, so I do think it's sort of this truth concept that I think makes these markets so important. They're not kind of the ultimate truth, but I think they're as close as it gets.
Good, okay. That was a hardball. So sports has become a very popular segment for Kalshi. Can you talk about the rise of sports and how you're battling different states over contracts?
Well, we're suing, and we're being sued by everybody. So if everybody wants to sue us here, we can talk after. Alfred is not happy. He's funding a lot of these lawsuits, but I'd say a few things. Like, I'll be careful because I'm going to Vegas tomorrow, so I'll be nice this time. First of all, I think very similar to the election, we're right on the law. Like, this has always been our approach: regulatory first, legal first. We do it right, we do it clean. It has to be the case. I believe in financial markets and healthcare, you have to do things the right way when you're handling people's money, and it has to be done well. So we are right on the law. I think very simple. If we list this on an SEC or CFTC regulated exchange, we benefit from federal preemption the same way that the CME benefits from federal preemption for commodity futures. So there's some laws in Kansas that ban some commodity futures from being traded in Kansas, but you can still trade these commodity futures on the CME because of the same laws. So that's very important. Like that's, I would say, from a legal perspective, we feel pretty confident, and I think, it's going to be a battle over the next few years, but we're going to stick it out. It's not our first time, battling lawsuits. I think then there's a sort of question of like, is this sort of then there's kind of the legal, there's the commercial, and then there's sort of society, ethical, like where is this going? So the commercial, obviously the results are clear. Like this is, people like trading on sports, and it's working very well, and that's great. The societal thing, like the thing that's interesting, I just think of it a lot as like going back to kind of some of the reasons we started the company that got us excited is just sort of like OTC to on-exchange traded. So like when people came to us on the equity derivatives desk at Goldman, and I was there in 2016, it's like, I want to get exposure to Trump. And we create a bundle. It's like, okay, here's the Trump trade. I feel like it could be a calendar spread like around the election day, which is an effective short on the S&P. You could add some fancy stuff on top. And then we charge ridiculous fees on top of that. Like the premiums are insane. And oftentimes it was a bad trade. Like, the Trump trade was shorting the S&P, but a lot of people were right about Trump winning, and then they lost money. Like there is obviously a better product than this, right? Like it's not very hard to build a better product than a product that goes the other direction. And it's kind of like this OTC to on-exchange, like, okay, this was a bad proxy. Number two is the pricing was very opaque and bad and non-transparent. And three, there's like an access question. Like not everybody can access a Goldman desk to get what they want. And I think it's the same thing here with sports. Like, people are coming to Kalshi and some of our partners because, you now have an exchange-based mechanism to trade. You're not just being handed like a set of odds by a sports book where you walk in and the incentive of the sports book or the casino is for you to lose money. Like their revenue is equal to your losses and vice versa. Whereas here, like our revenue is not equal to customers' losses. Our revenue are equal to our transparent 1 cent or 1.5 cent exchange fee. And we make it whether people lose or win money. It doesn't really matter to us. Our incentive is for people to retain and enjoy the product and use it more. And then you can see the trace, like you have a trace like in the stock market, where was the price before me, where was the price after me. It's very transparent. And then people can compete for your flow. You have competitive bidding. All of which are net positive. Like these are things that are good. Making a market more competitive rather than less is a good thing. And the results show, like on Kalshi, people lose, on traditional sportsbooks, people way larger percentage. So it's like, it was again like 90 to 95, depending on the place, but 90 to 95% of people lose money. On the exchange model, that's much closer to 50-50. And that's the type of thing that excites us. And I think this last one is the key thing for why like this over time I think is going to be the traditional, like the de facto model in the space.
Yeah, and I think it's interesting also like the amount of, for example, we're doing a lot of different structures for sports. And I think it's just broadly getting a lot of these activity that you see done in opaque ways, even like offshore, they do different mechanisms and things like that, and bringing it transparently to an exchange that's federally regulated, all of those things are net positive. And sports industry is just such a big industry with real risk associated to who wins the Super Bowl or not. And that you should be able to hedge and get exposure to these risks that are moving billions and billions of dollars a year on the industry. So,
I've been a huge fan of Kalshi for a bit, but I'm also a huge fan of your growth team. I feel like you have been at the cusp, if not the frontier, of reinventing what marketing is and growth marketing. You have this across different channels, you're pumping out different kinds of content, you go viral all the time. What's your favorite campaign?
Oh, wow. Well, I'm a big fan of our AI ads. I think that we had 2 Two that we really liked. I think especially the betting on the underdog one was very, very exciting. And yeah, I don't know. Do you agree? No, you like
the AI ads was pretty big because so we aired the first AI produced commercial on live TV. So that was, and honestly, we didn't know it was the first. We just did it, and it ended up being a big thing. My favorite has to be when we bought up this sort of crazy amount of billboard inventory across all the key states during the election. And we put live odds and live trades. So as the trades were happening on Kalshi, you could look up in a bunch of places. So Times Square, in the middle of Vegas, in LA. Pretty much, we kind of bought really kind of all the major cities and a ton of inventory everywhere. So you could look at a bunch of places and you could see the election odds and who's going to win. And you could see it in real time. You could see the actual trades being placed in real time. I think that has to be my favorite. But it's kind of the same because, when you're asking about the question about listing markets, it's all intertwined. The whole point of these markets is they're much more dynamic. It's continuously about what's in the news, what's on top of people's minds, what's trending, create a market about that and make sure that people are basically talking about it. And we see this as a kind of fully embedded end-to-end. Traditional market, you list something and you cater, build liquidity for it for years and that becomes a thing. The next generation just does not have the attention span for that. They just don't. I don't. I can't even watch movies anymore. I can't read. I just on TikTok all day.
And working, I hope.
Yeah, sometimes. But the point is things the things that are relevant they don't stay relevant for long anymore. They're relevant for a very, very short period of time. And so your operations, your listing, your markets, and your marketing has to be extremely dynamic. Right. It has to be sort of wake up on the day and figure out what's up, and then market it accordingly. And I think we've done a good job. I think it's small team, pretty hungry, pretty aggressive, and then just pretty creative. Just let people do their thing.
It's almost a mix of thinking how an editorial part of a newspaper would be about these what's in the news today. We need these markets. We need to push. Have a certain amount of liquidity, we need to do a certain amount of ads, how do we make them, and it's piggybacking out of viral events. Prediction markets are important because of the viral events, and we can also use them to grow. And having that flywheel, that loop, is a lot of what we work on, from contracts to growth and figuring out how to be better and faster and all of that, especially with the regulatory constraints, is a big, big part of what we do.
Amazing. Well, we're out of time, but it was a pleasure to speak with you both again.
Thank you.
It's been so much fun to watch this journey, and it just keeps on escaping velocity each time I talk with you. So, thank you.
Thanks for having us. Thanks, everyone.